The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I'm here with two stocks for your aggressive growth stock radar screen. And I'm here in person. I know it's been a long time. You guys haven't seen the red jacket in I don't know how many months, but it's back just in time for the holiday season, which we're coming up on. All right, well, let's just jump right to this here. I've got two stocks, both of which have reported very recently, so we're just going to go right into it here. The first one is Twilio, and it's TWLO. It is a Zacks rank number 3, and that's a hold, but that is going to come off, and that's going to be a lot better here in the near future because they just reported. It was a nice beat. We expect earnings estimates to move higher. We do have the B for growth and the F for value, and that means that I'm getting the divergence that I love to see from these stocks on these aggressive growth things. I want to know that the value investors and growth investors are looking for different things, and I see that right away with that. So as we see here, there isn't much movement in the Zacks consensus estimate for this year or for next, but we just had earnings, and the estimates really haven't filtered all the way into our system, and this is the beat that we're talking about here. Just happened the other day. The company posted 7 cents when the estimate was 2 cents, so that's a nickel. But there was the idea of guidance. Guidance was much better than expected, so we're going to see all of those numbers move steadily higher. And what does that really mean? Take a look at the chart here. How do we know that this is going to happen? The stock was selling off right there ahead of earnings, but then boom, here comes earnings, and now it's kind of that rope-a-dope move there where it's a down and an up movement. Obviously, this stock was really left for dead down here in the mid-20s and has been on this nice move higher. Estimates, coming around and looking a lot better. If we take a look at the 2019 year, it was starting to come around. Now it's looking better and better, and I think after this next beat, we can see this estimate going to come up over here. Now, obviously, on scale, we're talking about a little something different here, but we could easily see Twilio move over $100 per share in the coming weeks. All right, let's jump ahead to our next one, and this is another stock that just reported earnings, so this almost feels like a Bolin's blowouts type a video, but it's not. It's all about aggressive growth. This next one is CyberArk, and it's CYBR. It is a Zacks rank number 1 strong buy with a B for growth and an F for value, just like Twilio. So we do have that divergence there for the growth and style scores, just what I want to see. So let's jump ahead here to the earnings estimates. Now again, just because there was this beat here last night, and we can see the magnitude of this beat here, 77% on the positive earnings surprise. And boy, if you take a look at the earnings surprises here, 14%, 52, 50, now 77. It's moving in the right direction, if we think about it that way. Now, these numbers here, obviously, they're holding steady over the last, 90 days or so, over the last quarter. Same thing for next year. But look for those numbers to really move substantially higher after that gigantic beat. And if we take a look at the chart here, we can see that cybersecurity plays have been doing very well this year. Just a nonstop up movement, a nonstop trend right there. Obviously coming back here, and then also like Twilio, that down and up move. Now the idea is that October was a bit of a stressful month for a lot of tech stocks. So a lot of names came in. CyberArk is one of those. There's a bunch of others that sold off here. Are we out of the woods after this midterm elections? I don't know. It's maybe just a little bit too early to call. I wanted to see a capitulation style event where things like really get real bad. Everyone throws out all of their stocks, and that would be the great time to buy. But maybe, just maybe, this is the end of the bad news for all these growth names, and things will start to turn around and look better. That's it for this week. Be sure to join us next time when we take a look at 2 more aggressive growth stocks.